All right, welcome in. Good morning. I am Scott Shelby, otherwise known as the Cow Guy. This is Market Day Report. We're all happy to be here. Hopefully you are too. Let's take a look at our overnight markets. We're going to start with that real quick, and we'll take a look and see what we've got going on in corn. What did it do overnight? Well, I tell you what, I think everything was just a tad easier. Well, at least in July it was. A half cent lower in July. 442 was last. We had about, I'm going to say not quite a 3 cent range. Everything else was up a couple, 3 ticks going out the deferred. So not a lot going on. That's corn. We move over to the beans. They were off a little bit as well. Well, no, they weren't. 6.5 cents higher. July, 11.85 and a half overnight. And we had August up 6.5 cents to 11.84. So I was just looking at one of our screens. It must not be working there. How about that? All right. So we got a 6.5 cent rally in the beans. How about wheat? Penny and a half across the board. A penny and 3/4 higher in the July to 6.60 even. And that's in the middle of that range. We had about a 10-cent range, 6.55 to 6.64 and a quarter. We're right smack dab in the middle of it. So that's Chicago wheat. Let's take a look and see what Hard Red had in store for us. This is going to be the one down in Kansas City. That's a penny lower there to 6.86 and a quarter. And about 2.5 cents off the low of the day and well off the highs by, about about 7 cents. We had about a 10-cent range, actually exactly a 10-cent range overnight in July Hard Red. So we're down about a penny and a quarter across the board when it comes to the Hard Red. Moving from Kansas City to Minneapolis, the spring wheat's up 2 1/4 cents. 7.25 and 3/4 is last, 2 3/4 cents off the low of the day there, and only about 3 3/4 cents off the high. So kind of a tight range as well. And we're up between, say, 2 1/4 to 3.5 cents across the boards for the spring wheat. And then finally, we'll take a look at cotton. I think cotton was higher. Yeah, it was 112 points higher, 74.60s last there. That's July. And that one needed a rally more than anything else did. Dees was up 49 points to 74 even. All right, let's bring him in. He's the one we seem to be starting every day with, Brian Oops. He's the president of Midwest Market Solutions. Brian, good morning. Thanks for being on. Kind of a quiet one overnight. We just did the radio show. Not a lot going on. What do you see?
Hey, good morning, Scott. Yeah, it seems like 4 out of 5 days I'm here almost starting off the morning. And there isn't that much news overnight. A lot of it concerns the wheat market, and it's kind of going to be, I think, a real tell-all day for this wheat crop. So Sovcon lowered the Russian wheat crop estimate again from about 82.7 million tons that they had previously forecast down to 80.7 million tons. So a sizable cut in production once again. And I really think U.S. wheat values are trying to shift away from supply issues, supply concerns over the Russia wheat crop, and starting to focus now that U.S. harvest is starting to expand in Texas and move farther north, because we have to price this wheat so that we can sell it. We had an Egyptian wheat tender yesterday, and there were 4 other countries that participated in the wheat tender, not including Russia. So there's 5 countries ahead of us as far as where the world is going to turn to get their export needs. So we're maybe number 6, 7, 8, somewhere way down the line that anyone would buy U.S. wheat from, because most of that's price discussion or price discovery. We're just too highly priced. We couldn't sell wheat at $6. We're not going to sell it at $7. So now the job of that wheat market is to find that price level that'll stimulate that demand. And so we're probably looking at lower prices over the next 30 to 45 days, trying to find that level that will get the U.S. back into a competitive nature. And that doesn't really bode well for corn or soybean producers either. We've been down 6 days in a row for corn and soybeans. Maybe day 7 is the magic day where we finally see a technical bounce, but the fundamentals really aren't there to suggest long-lasting rallies in any of these grain markets.
Yeah, I mean, to your point about that wheat, what I don't like about it, and you've explained that very well about what's been happening about our competitiveness, but when we get bullish news and can't rally, that tells you something, right?
Yeah, so today's going to be a real tell-all day, I think, because we had the bullish news from Sovcon, and if we can't rally off that news or have a stronger close, it's really going to tell us that this market is shifting away from that supply issue mentality and focusing on U.S. harvest and U.S. demand.
And that's just going to weigh heavy, and that's the problem. I think there's a lot of things that are weighing heavy. We're at some critical levels in corn as well. I just don't like putting in my marketing plan because obviously, I have to pre-apologize. I get up on the bed of the side of the bed of the producer every day, but I don't like having most of those marketing plans out there waiting for some sort of weather rally. I don't like that.
Yeah, time is starting to run out, especially for this winter wheat crop. Harvest is starting, so there isn't that much time for supply weather type rallies. And you get corn and soybeans. Well, okay, so maybe we can make a case that there's going to be prevent plant acres for corn, maybe some acres shifted over to soybeans. You can always have a late season type weather issue, but that window of opportunity to market and make some sales is starting to close. And I've heard from a lot of producers that they're just going to sit on the crop this year. They're going to store it and see where we turn out next year, how many acres we plant. And I think we're probably going to shift back to more corn acres next year. This was a down year for corn, an up year for soybean acres. Probably going to shift that back next year and look at more corn acres. So, that's a risky proposition as well, just to throw it in the bin and forget about it.
You're so right about that because there's almost like a time decay on the summer weather, right? I mean, every day that you turn that calendar day by day, and you don't see anything 2-3 weeks out that's getting very threatening, that starts to get a little bit uncomfortable. You know what I mean?
Yeah, absolutely. That's the window of opportunity to market here is, starting to not shut, but it's starting to close ever so slightly. We had a pretty big sizable spring rally, and a lot of producers did take advantage of that, but they were selling more old crop than new crop
Right.
and haven't done a lot of marketing of that new crop corn and soybeans. And now they're starting to talk like, hey, I wish if I would have sold corn at 490, if we get a rally back to that area, I'm going to go ahead and do that.
All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more. Brian Hoops, he's with Midwest Market Solutions. We'll be right back, right after this. All right, welcome back. Let's talk about some livestock prices. This is where we closed out yesterday, right? I'm going to get used to saying that one. Let's talk about what we've got going on the live cattle. The live cattle board is, well, we had a 15-cent gain in the front yesterday, and everything else was just a little bit easier. All right, so June closed at 182.17, up 15 cents. The next worst was August, down 42 cents to 178.45. So there you go. And then everything else was off between 7 and 12 cents. So really not a lot to talk about there. There's not a lot of meat on the bone as far as conversation goes there. Feeder cattle, well, they were off anywhere between, say, 17 cents to 32 cents. So that was something similar. We had August closed at 256.02. And you go out to the deferreds where we lost, say, even 32 cents in that Jan to 256.92. So that's what we did yesterday in the feeders. I know it was a quiet one. Let's take a look and see what we did with lean hogs, and we'll get to our guest analyst. That is where we had the action, and it was to the wrong way. We were 95 cents lower in the front month, June, and 92.70. Well, actually, we're going to probably move out to July. Is probably doing a little bit more business now. $2.35 lower in July. 93.92 is last there. That was where we closed yesterday. We'll see if we can get anything any better there. Let's bring him back in and see what he has to say about it. But it's Mr. Brian Hoops with Midwest Market Solutions, Springfield, Missouri. All right, Brian, anything, I don't know, tickle your fancy when we talk about those prices?
Well, I think you have to ignore the technicals in the cattle market. You have to look at the fundamentals, and I still think they suggest that we're going to see a stronger cash trade this week. The show list numbers are down, cutout values are moving higher, and packer margins are being restored. So they're about $16 in the black now, which is a good sign, and that they can pay higher money for this cash market. The screen kind of looks like a mixed opening. We saw a lot of spread trade yesterday with June gaining against some of the other months, and I think they're going to correct that on the opening anyway. And then we'll see if we can start to build from there, if we can build on yesterday's rally at all. The hog market fell sharply yesterday, and it's not going to get any help today from the weekly hog weight report that was out this morning. They are up almost 7 pounds from last year, which is a huge amount for the hogs. They jumped about 2.5 pounds from last week. So just on that basis, that fundamental, it's bearish for the hog market and probably have some weakness there. A lot of probably technical selling as well to enter in the hog pits today.
Well, I mean, you're right. And one of the things I'm going to keep an eye on actually for the next probably month is this tacit admission that the consumer's got no money. I mean, you've seen some of these big retailers, Amazon, Target, Walmart, now Walgreens yesterday, lowering prices on everyday goods. I don't think it's going to be forever. It's going to be try to get people in there during the summer, maybe even for the beginning of the school year. But then at the same time, $5 meal deals, Burger King, McDonald's, and some of these other restaurants that are actually going out of business, like Red Lobster and TGI Fridays. I mean, 90% of America might be in a recession right now, and you got to be careful about running away from that consumer's wallet when you talk about these high cattle prices. 10 seconds to you.
Yeah, I absolutely agree, 100%. It's got to be a concern for the consumer out there paying for higher beef prices. They're going to look for alternatives, and it's not going to be beef. It's going to be something else that's pork, chicken, something else that's a lot cheaper.
The Shelley household will be on Steakums. Remember those things? All right. Thanks for being on, Brian Hoops. Good morning, Brian. Thanks for being on. We'll bring it back here to Nashville and hand it back over to Suzanne.
Steakums, better than Spam, I think, no?